Hello, everyone. Happy Sunday. This is Simon with Trade, and we're back to our weekly webinar, mapping out your week ahead. And of course, happy holidays to those that celebrate. Happy Passover, happy Easter, and happy Sunday to all. So, few things for the new people. The webinar, the purpose of the webinar is to create a plan for the upcoming week. And as I always use the quote from traders when they say you plan your trade and then you trade your plan. And this is the whole idea of this webinar, to put all the information that we gather together and kind of create a plan, create the structure, create possible scenarios for the upcoming week. A few things about myself. My name is Simon Friedman. I'm a senior account manager with AvaTrade. I started my trading career in June of 2000, so it's almost 26 years now. I did prop trading. I did it for about 11 years, and then I moved on to different ways, as I say, less stressful environment, and also started to mentor and educate others. I'm very happy to have this great opportunity to be assisting our customers at AvaTrade. As usual, the agenda of the webinar will talk about indices, stocks, commodities, FX, a little bit of crypto for dessert, and we'll start with some fundamentals, with some screenshots, articles with some key points. We'll take a look at economic calendar for this week. We'll move then to the charts to look from the technical angle and put all that information together to see what can we expect from the upcoming trading week. Now, just to remind us, we had a short week. It was the markets were closed across the globe, I think, on Friday for Good Friday, and Monday U.S. markets are open. I think Japan is open also, and most of the European markets are closed. So, not to get confused, you can go to avatrade.com website and go to trading info and holiday schedule. You see detailed schedule there by markets, what's open, what's closed. As far as the US market is fully functional on Monday, I think out of all the markets, there's a little bit difference on soft commodities. Coffee, sugar, and cocoa will be opening later than usual. Otherwise, US markets are back to normal on Monday. Okay. Before we go forward, the risk disclosure, you can find the full statement at avatrade.com website. Of course, everything we do here is purely educational. We do not suggest any trades, and we do not give any trading signals. Social media, please follow us on Telegram, X, and YouTube. As I always say, YouTube is my favorite. They have tons of information there, including tutorials, educational material. Webinars are being recorded and posted on YouTube. So at any time, if you missed or if you just want to go back to the past webinars, you can just watch them. It's available for you. And of course, don't forget to click likes if you like it. Don't forget to share if you feel that somebody else can benefit from it. And if you have any comments, please write them down. All right, so we had a short week, and of course, the highlights, as we started last week's webinar with the statement that we can pretty much finish in 5 minutes. The war is still there. The oil is still flying. I think this past week we had huge, I think the biggest in history, a dollar amount jump in oil in one day, according to Dow Jones data. I don't know how true that is. But if you remember, I think last week or the week before, we said the Brent oil is stronger than crude. Now it's the other way around. And I did some research, and the reason is the crude oil took over because crude oil is trading for May contract and Brent is trading for June contract. And of course, the concern, the worries about the war going on and the shortage of supply, it's higher for the closest contract, which is May. And this is the reason the crude oil looks stronger now. There's higher demand for it. So also Friday, even though it was the markets didn't open, we had employment data, and here it is. Strong jobs report eases labor market fears for now. The key points. Employers added 178,000 jobs in March, and unemployment rate dipped to 4.3%, indicating the solid labor market. I'll give you a spoiler. I have in the next slide that kind of spoils it. Geopolitical headwinds from the Iran war are expected to add volatility to the future labor data, with effects yet to be materialized. Stable labor conditions with 68,000 average monthly job growth reduced Federal Reserve pressure to cut interest rates, which is not so great for the markets, right? Here we go. The March jobs report isn't as good as it looks. Here are the bad parts. The U.S. added more jobs in March than it had in 15 months, but it's still not easy to find employment. Key points. March saw the U.S. add 178,000 jobs, while the jobless rate fell to 4.3% as 400,000 people left the labor force, lowering participation to 61.9%. Point 1. Point 2. Wage growth slowed to 5-year low of 3.5% over the past 12 months, coinciding with rising inflation due to the Iran war. Despite low hiring, layoffs remained low, with the 4-week average of jobless claims at 207,750, indicating a low hire, low fire market. I'm not a big specialist in the employment details here, but whatever it is. Now, speaking of firing, this is an interesting article I read. Mass layoffs by email might be the new norm as Oracle lays off thousands that way. The cloud computing database company began cutting 30,000 jobs on Tuesday. And we'll get to the key point in a moment. Oracle this week told some workers in the US and India that their roles were being eliminated. Key points. Oracle Corp conducted mass layoffs estimated at up to 30,000 people as part of their cost cutting for AI data centers. And here it is, the key point. Imagine you wake up in the morning and then you get an email already waiting for you. Not a happy Tuesday for some people. Employees were notified of job elimination via 6 a.m. email, a growing trend for mass layoffs in the tech industry. Oracle stock has declined 4.6% over the past month and 25% year to date, with 162,000 employees as of May 2025. I mean, we can judge them, we can understand, but it's still not pleasant if you get notified of losing your job 6 a.m. Not a great beginning of the day. Just an observation. Tech volatility may just be getting started. What jittery investors can do right now, and they give a little bit of overview with the high tech and so on. So let's just read through these 3 points. The tech-heavy Nasdaq Composite Index has dropped 5.9% in 2026, partly due to uncertainty from the Iran war. Amazon, Meta, and Alphabet committed $650 billion in 2026 for AI infrastructure, altering the asset-light narrative for tech stocks. And here's the suggestion. Experts suggest reevaluating risk, considering low beta, high dividend stocks or PICs and shallow companies benefiting from AI capital expenditure. All right. So these are the articles, and here's another one. April 6th, which is tomorrow, is a deadline. Trump threatens hell for Iran if it doesn't open up the Strait of Hormuz. Key points. President Donald Trump issued a 48-hour ultimatum on Iran, threatening consequences if demands aren't met. The Strait of Hormuz, vital for global energy trade, has been effectively closed. Trump's post confirms on April 6th deadline for Iran to open the Strait of Hormuz, potentially impacting markets. Again, when he was saying it, it was a weekend, I think, the markets were closed. So let's see how we open on Monday after the short week and after all these developments. And of course, most of us, we heard the story about the American jet being shot, and there's a rescue going on. And thank God, I think they saved both the pilot and the technician, and they're safe, and that's a good news. All right, the Feds. Uh, I keep on putting this report as I always do, but I think it's not relevant. I'm still putting it just for the illustration. With all the situation, inflation growing and the oil prices skyrocketing and everything else, so there's almost zero probability of the rate cut on the 28th of April. The number is 99.5%. Economic calendar. All right. Just to explain a few things before we go into details. For new people that are not familiar with it, it's public information. You can access it on our web trader or the app, or just Google it. And I always say every trader should, active trader, if you are trading involved in the markets, you should know these things, because you don't really want to be caught up with a huge move in the market and you don't know where it comes from. So just to know ahead of time the certain things are happening, especially major things like interest rate decisions and other NFPs that we had on Friday and other important events. So here I take out only high impact events. There's so much more, and as I always say, you can browse through it and filter and choose and pick whatever is relevant for your trading. But here I just take out the high impact events, and the times here are GMT. So Monday we have PMI service PMI numbers from US. Wednesday we have interest rate decision from New Zealand. By the way, New Zealand dollars, it's been probably if you take the major currencies, it's been the weakest. Of course, it's not as weak as the Turkish lira, but if you take the majors, again, it's been weak. We'll take a look when we get to FX. So we have interest rate decision and policy review, retail sales from European Union, FOMC minutes. That's from the last meeting. We'll have more details. Also important, that's on Wednesday. We'll hear whatever they're looking to do, the analysis and conclusions from the Feds. Thursday, we have core personal consumption expenditure, also important number for the Feds to watch in the decision on interest rate. That's on Thursday. And Friday, we have a lot of numbers here. We have CPI numbers from China, CPI or consumer, CPI, I guess, from Germany. We have employment data from Canada, and we have CPI numbers from US, also very important for the Feds, and Michigan consumer sentiment, also important. As you could see here, just to give a comment, the previous number went down 53.3, and this number they expected 52.5. You could be even lower with the gas prices, I think, hitting in the US, they're hitting $4 per gallon. As concerned about the war and everything else, shortage is happening. So this is the economic calendar. Let's move on. Winners and losers. All right. Here on the winning side, we have commodities. All these are futures, just to be clear. So we have commodities and some indices here, making not the history, but making positive moves for the past week. And we have commodities that are lost for the past week. So let's just go quickly through them, and then when we get to the charts, we'll go one by one as well. So crude oil was the winner, 18%, palladium 11%, silver 735, heating oil almost 7%, platinum almost 7%, gasoline 661, gold 616, Nikkei, these are the indices. Japanese index was up for the week 373, Nasdaq 343, S&Ps 299, Dow Jones 265, and cocoa 251. To the downside, sugar was down 5.5%, coffee almost 4%, and corn 3+%. So these are the winners and the losers. It's good to watch them. Sometimes they continue the same direction. Sometimes we see the reversal. So these are the major or the biggest gainers and the losers for the past week. All right, we're moving to the charts now, and we'll start from indices. Then we'll go to some individual stocks, then commodities, then forex, and as promised, a few words for dessert on cryptos. So let's start with China as usual. China, we had that cross here this past week when 50-day moving average went below 200. For some analysts, it's a sign or a signal for selling. And we haven't been crossed for a very long time. I'm just trying to zoom out. Let's see when we crossed up. We crossed to the positive direction in October 2024. Here, somewhere in the mid 2025, we got close. And here we just crossed. And we see that cross with 50-day moving average crossing below. With a big sell-off here on Friday. So that's Chinese index. Let's see if that signal will trigger some selling. Japanese index, as we said, it was on the list of the winners. It was up 373% for the week. Nice bounce here, right? And the whole bounce happened here on the last day of March. Then April 1st was continuation. The 2nd of April was a little bit of a sell-off, and then positive day on Friday. Overall, positive week for Nikkei. Again, if you look at this formation, some traders might find it as the head and shoulder. We have the left shoulder, right shoulder, and the head. And we're somewhere at the neck price now. So some traders would look at this as a setup for selling. Just my observation. I'm very neutral when it comes to these things, because I always believe if you try to find something on the chart and you work hard, you always find it. But it does look like a head and shoulder. Could be, right? Going to U.S. indices, the S&P 500 was up for the week almost 3%. A nice recovery here, right? And from this base of around 64.20s, let's see if that continues on Monday. Now, again, we had a short session on Friday without the markets being open, so we didn't really have a reaction because the equity markets on Friday didn't open. So Monday, especially with this ultimatum that's expiring tomorrow with the 48 hours, we might see some volatility on the market. I mean, we probably will see. So that's on S&P 500 was a strong week. The same thing on NASDAQ. As we said, NASDAQ was up almost 3.5%. Also a nice recovery here. Dow Jones, also a nice move to the upside. German index. Let's take a quick look on the weekly chart. Also, positive week move to the upside. UK had a very nice recovery actually here. So you could see the whole week we pretty much went up, and we came to the previous resistance here at 10,453 for March 18th. We actually closed higher. So I think it looks very, very strong. Even the French index had a nice bounce here, trying to test the 200-day moving average. So if you take the whole week, we had a positive week in equity markets. The indices are showing a nice bounce to the upside. The question is, was it a profit taking? And then we'll continue lower, or we're looking for a nice recovery? And I guess we'll find out soon. And of course, it all comes to the oil panic, and the war in Iran continues. And now we have the ultimatum and other things that affecting the way the war goes on and plays out. So those are the indices. Let's move to the stocks, the individual stocks. Let's start with NVIDIA, actually, as NVIDIA for a while probably still is leading. Take a look. It was a positive week for NVIDIA. This is the weekly chart. This is the daily chart. You zoom out. So as you could see here, we said it, 170 was kind of a support all the way, starting from somewhere in July of last year. As you could see here, we always bounce from this area here, where the triple bottom here to the point pretty much. Then we dipped below at the end of March, and then the 31st was a bounce right back into this area, and we're holding. So that psychological level around 170, 171 is holding so far, even though we are trading below the 200-day moving average here. We can, you know what, let's take a look at Oracle, as we spoke about them laying off 30,000 employees over the email. So you could see the stock's been suffering a lot since making highs here back in September. It's been sliding a lot, breaking through 50-day moving average, retesting, continuing, and settling. This is the weekly chart, so the 200-week moving average became kind of a support here, right? And this week was positive. The whole market went up, right? So that's a boost, and also they are trying to cut expenses by cutting the workforce. So let's see if this will be the bottom, and Oracle will try to move higher after all these losses coming from 345 to 140s. Huge drop, but $200. So well, that's 2/3. They lost 2/3 of its volume from the top, right? If my math is correct. All right, so that's Oracle and NVIDIA. Now let's go through the, as we call them, big boys. Let's see how they look. Daily chart for Apple. We found support around 200-day moving average. With the market, we bounced this week. Amazon, a lot of choppy trading, right? You have a lot of white space here, a lot of gaps. Hard to find any logical explanation for that. Microsoft has been selling. This week it bounced a little bit with the market. Google, if you remember, Google has been the strongest out of 7 group. As we broke this level here to around 295, we came lower to this congestion area here, and then we're coming back to retest it, possibly re-enter to this area above 295, 296. So Google remains strong. Meta has been selling a lot this week. We had few gaps to the upside. We tried to come back into this 585 plus territory, having a hard time. We had this spike here on 1st of April. Let's see how it works out. Tesla trading at 360 below 200-day moving average. We have 50-day approaching that 200 moving average here. And our strong support is around this area here, from which we had a nice move to the upside around 340, 343, 344 area. It's about 15, 16 points from now. That's on Tesla. Let's take a quick look at the oil stocks. Exxon. Had actually a sell-off here from 175 on Exxon coming to $160. Chevron, similar picture here. All right, profit taking or reversal? $1 million question. Let's see what happens. Now let's take a quick look at banks. The banks also had a nice bounce this week. This is the JP Morgan, the 295, 296 area. Looks like resistance. We did have the dead cross here something that we mentioned already. And we just mentioned it on China, actually it looks similar here. We in the dead cross territory could be a trigger for selling. And we are, as you could see as I zoomed out, this area here around 295, 296 has been a support, and now it looks like it's becoming a resistance here. Goldman Sachs, we bounced nicely off 200-day moving average. I actually made a high lows and high highs, which is a positive sign here, and we don't have a dead cross here. So Goldman looks stronger than JP Morgan. Bank of America, take a look. Scrolling here, really trying to cross. Actually, we did cross technically. If you look here and point over here, so 50-day moving average is 50.70 and 200 is 50.74. It's hard to see on the chart, but if you look at the details, we did cross to that cross, which also could be a signal for selling to some analysts. On Bank of America, Citigroup looks stronger here. We're holding up even above the 50-day moving average. Very strong sign for a Citigroup here. Now the airlines, interesting. Let's take a quick look at airlines. And also I just want to bring to your attention, there's an index that you can trade on MT5 called airlines. And take a look, since the beginning of the war, right here, the war started on February 28th. Here's the gap over the weekend, right? We did open with the big gap and moved lower, found double support, double bottom here, and tried to break through. That's on the index. And if you take a look at individual stocks, here's the American Airlines. It looks similar to that index with that gap down and trading at the bottom. Delta Airline looks stronger here, but still we did move down. It recovered nicely here. We have Southwest Airline, also a sell-off sitting around 200-day moving average. So something to track. I think I mentioned last week or the week before, I'm not sure. And why did I bring the airlines? Because using the fuel, and fuel is very sensitive to the oil prices, right? So something to pay attention to. Also, sometimes we discuss these things, the ETFs, you have SQQQs, which is Pro Share Ultra Short, which goes the opposite direction of NASDAQ. And we spoke about this a few times. When the market sells off, sometimes we see big moves on these ETFs. For instance, from here, after this accumulation here in the 60s and 70s, with the market sell-off, we went all the way to 90.66, something to watch, right? So the NASDAQ is going higher. That's what we had this week. The SQQQs, the ETF is moving lower. And then when there's a sell-off in the market, like it was here, it was here, it was here, it was a nice move to the upside. And this ETF is the VIX short-term ETF. It goes together with the VIX. When volatility rises, this ETF is moving high as well, sometimes significantly, like this move from 50s to almost 70. And then when the market went higher, we had a nice move to the downside, and then we bounce again and volatility increased. So something to pay attention to. Oracle we spoke about. Okay, I think we're done with the stocks. Let's move to commodities, and we'll go through the winners and losers really quick. Here it is, the oil, the biggest move here on the second. We went, I think, $11+ here to the upside, and that's what Dow Jones data says, the biggest dollar amount move on the record. Whatever that means, I'm just quoting. So crude oil up 18% for the week. Palladium had a nice move. We're approaching 200-day moving average after the recent sell-off of metals. Up 11%. We're facing that 200-day moving average here, and also 1519 area. If you could see these two, I think we spoke about it once. And the two tails had support right here, and then we broke through. Now we're coming back, testing the resistance at the same level. Silver, also a nice move to the upside, up 7.35%. It looks like we found some support around here, around 64 to 66 area here. Let's see if it works out for silver to move higher. Heating oil, a nice move this week as well. This is the weekly chart. Lots of tails, lots of volatility in the energy futures. Platinum, also up almost 7%, 6.92%. Similar story here. We just broke through this 1914 area. Support. We're back above that level. Gasoline, also a nice move to the upside on the weekly chart. As you could see here, a lot of tails, a lot of volatility here. And we are holding at the top. So sellers pretty much not having any power. The buyers are holding it after this parabolic move to the upside. It's been very, very strong. The gasoline. Here comes gold. As we said, some central banks are selling. They need cash for whatever reason. We're still holding this level from the previous tail. As you could see here, the low here was 44.0178. We did break through it. This is the weekly chart, the week of March 22nd. I recovered right back in that area. And this week was a positive week for gold. And on the daily chart here, we're trading around 100-day moving average here. And the strong level, if you take this tail here, is around 44.02 area. Pretty much 4,400 psychological level, right? That's on gold, up 6.16%. And cocoa is another one that had a positive week. Here, as you could see, something is happening in cocoa. Just to refresh our memory, all this move happened, the shortage of cocoa beans from West Africa. Then we had a sell-off, came back, retested, went higher, and since then we've been sliding lower. And we mentioned that cocoa could have found a support here around 28.80s. We had, this is the weekly chart. So the week of March, the first week in March, we had a nice recovery here, and then we're holding pretty much at the top of that range, right? I just set up that level. So as you could see here, we're playing with this level here around 32.30. We went higher. This is the recent resistance here, 34.48. We tried to break through the beginning of March. Then we went below. And then the last few days, we're trying to move higher here. And on the second, we sold, but we're still holding that level, approximately 32.30 is the level. We're still below the 50-day moving average here. We try to move. So ideally, for cocoa to move higher, we need to break this 34.48, maybe 34.50 psychological level. That would bring us possibly close to above the 50-day moving average when we catch up with it. And we need to start building up some support in order to move higher. There's a lot of accumulation here, and it's not giving up, right? So the buyers are holding it. So let's see what happens with cocoa. It's really worth watching it. Sugar, after a nice move to the upside above the 200-day moving average, this whole week we've been selling on sugar, coming to 14.94 area here. And let's see if we find any support. This was a resistance, as you could see here, right? A lot of attempts to break through, then we broke. All those sellers became disappointed. They rushed into covering the shorts. I'm just hypothetically analyzing here, right? Then we came right back. The question is, will the buyers take over here, or would the sellers get excited and reshort the position to move lower? That's a key point around here. Sugar, coffee sitting here, right here, 295, 296 area. below the 50-day moving average here. And this is the level that we tried to break through. Then we came straight back to it. Looks like we're finding support potentially here on coffee. And the last one is corn. We had a nice move. We came to this level that I marked when the reversal of the trend happened here back in May of 2024. And we're finding resistance there again, 473.70s. We tried to break through, we bounced twice at that level. We're above the 50-day moving average here. And if you just take a look at this level where we are, it's crucial here. We tried, this was a double top, and then we moved lower, and then we broke through it beginning of March, and then we're testing that level again. So if it did break and start building up a resistance, we might go lower and retest the lower levels. If we start building support, we might actually try to move higher from here. And on the weekly charts, you could see here, it looks like we're making a higher highs and higher lows, which is a positive thing for corn. All right, moving to FX, dollar index. Dollar index is strongly holding above 99. It did try to push it lower. We are bouncing right back. This level, as you could see here, was a strong resistance. Then it looks like we established a strong support around here, 99.28 area. So the question is, what's with the war? The question is, what's with oil? And of course, dollar got strength when the probability of the rate cut just flew out the window. So dollar is remaining strong. Let's run through the major crosses. Here we go. A mirror image of euro dollar, right? This was a strong level. We're bouncing off it. Pound doesn't look so strong. We're just making lower highs, lower lows. Doesn't look strong at all. Australian dollar is trading below the previous support here, also showing some weakness here. New Zealand dollar is super weak. That's what I mentioned to you. And there's an interest rate decision this week. So let's see if anything will change for New Zealand dollar. As of now, we're clearly zigzagging, making lower highs, lower lows, and moving lower steadily. Dollar Swiss, we did retest this week the level of 80.39 right here. And the 200-day moving average is holding strongly here. So let's see if we have another push to the upside on dollar Swiss. Dollar CAD, it's kind of overpowering the Canadian dollar with oil prices. Normally, if there's nothing like war, anything crucial, the oil is going higher, the Canadian dollar is gaining. In this case, it's not happening. We actually, this week, we just broke through the previous resistance here, approximately 139.27. We closed above it. As you could see, we tried, and then we did close above this level, which could be potential opening a new space going somewhere here or here. Let's see if that continues on USD CAD. Dollar yen, I just drawn the channel here, connecting the bottoms and the tops here. We are trading above the previous resistance here around 159.20s. We did close the week actually negatively, right? It was a negative week overall. So let's see what this week will bring. I mean, ideally, for the short, we would need to break the trend line to the downside, for the long, the opposite, but that's ideally. Nothing is ideal in this world, but this level, the current level here, has a lot of actions. The question is, which way we're going to go. Let's see the yen in general, what it's doing against other currencies. Aussie, trading below 50-day moving average here. Canadian, also weak. Swiss, week. So yen, it looks like it's gaining a little bit of momentum here. Euro yen is trading the clear channel here between 182.40s and 184.70s, with somewhere in the middle. Take a look at this channel. It's been going on for a while with few attempts to break through, and we've been trading in this range since we entered December 2025. So a lot of accumulation in a very tight range here. The question is which way we're going to break and continue, if we will. And New Zealand, as we said, and I mentioned to you before, it's the weakest, and it's been just selling against all major currencies. Yes, you could see clearly with the yen. And I mentioned to you the Turkish lira. It's a funny chart. I don't know if anybody's trading this, but take a look at this funny chart. Just slowly moving higher. This is the weekly chart. This is the daily chart. And as I mentioned, there's the Bank of Turkey, Central Bank of Turkey, just sold physical gold for $8 billion worth, $8 billion, I think. All right, that's FX. And as promised, a few words on cryptos. As you can see, Bitcoin is trading below 50-day moving average here. So if we look at the immediate levels, so recently we had a low here at the end of March, which was almost 65,000. And the recent high a few days ago was 69. So we're trading within about $5,000 channel. This is our channel. As you could see, it's similar to the channel before, right? We've been trading here before, breaking up, going back into the channel, making a high, faking a breakout, coming back, holding it, and now we're back into the channel, trading pretty much in the middle of that channel. So that's on Bitcoin. XRP, we're trading below that line that I mentioned to you a week or 2 weeks before, 134.50. We are trading below, which possibly could open a continuation of the sell-off, or we could come straight back and move higher. I mean, with cryptos, you never know, right? All right, I think we're done here, and I want to thank everyone for participating, and I hope this was useful. Again, just to put it all together, the war in Iran, the prices on oil, the ultimatum of Trump, we have some important data coming in economic calendar. We have the core personal consumption expenditure and CPI and interest rate decision from New Zealand and Michigan consumer sentiment. So these are the important things. We have winners and losers that we mentioned, something to watch. We have President Trump's ultimatum for 48 hours. We have layoffs. We have sign of positive employment. And we have 0% probability of interest rate cut in the upcoming meeting. Enjoy the weekend. Prepare yourself for a busy week. Again, Monday, it's still weird markets, even though US markets are fully functioning, but most of the European and other markets are closed. I think Japan is open. But again, check the holiday schedule on the website. And I want to wish everyone a successful week. All the best. Take care.